All right, team. Hey, what's up? Chuck here with Traders War Room. We got the market wrap up, and we're going to talk about the weekend review. It starts at 5 p.m. We'll let some other people come in here, but we'll go ahead and get started. Guys, the idea is that we want to kind of look at what the market did, to take that kind of in, breathe it in, see if we can see any type of gems and diamonds in the rough moving forward, and kind of develop our strategies so that we can go out and destroy this market. Now, real quick. This is free, so all I ask is you let me do my intro, and then we go ahead and get cracking, and we'll pull up the charts. I'll go over a few that I got some interest in and moving forward, and then I'll ask you guys to start putting some charts that you guys want to go over specifically in the chat group. But with that said, let's go ahead and get at it. Specifically in the chat group. But with that said, let's go ahead and get at it. Legal disclaimer, this is not financial advice. The content is for entertainment and education purposes only. You're responsible for every decision you make. We want you to have fun, use caution, and always go to war. Guys, we offer a whole bunch of services at Traders War Room, from free and paid services, real buy time alerts, live trading, mentoring, trading classes, you name it, we got it over at Traders War Room. Come check us out today. The links are right there below. You guys can do a Google search and find us, and then come get you some. We want you to quit wasting money that doesn't make money. We want you to invest in yourself. That is the big thing. We hope you do that with Traders War Room, but regardless, we want you to be successful investors and traders out there in this market. Now, let's go ahead and check on some of the alerts that we had with Traders War Room. So here's some of the alerts that we had, guys. We killed it, absolutely killed it this week. We had a BBY trade today, made $147 off of that. Haitian was killing it with a couple some cheap plays, $43 there. He had another one that had $10 there. We had the killer though, Tesla. Look at that profit, man. Boy, that was a fantastic trade, and that thing moved, and Tesla definitely came out with some bank. And we had another play, UCO, and that one came in at $195. But for the big winner, guys, there it goes, man. Tesla was your winner and made people bank. So thank you, MTA, for providing that over there at Traders War Room. AlgoBot, guys, we want to talk about the AlgoBot real quick, man. It works on any platform. You don't have to have TradingView, Webull, Robinhood, whatever. You don't have to have any specific thing, man. Our AlgoBot works on any platform, and you can use your phone and computer, man. We made it super simple, man. So it's Barney style. We got intraday alerts, SPX alerts, and NDX alerts. So let's take a look at the intraday alerts that we had. These are the ones that closed out. Of course, these are long signals because the market was rallying, but these are usually good for up to 2 weeks to a month. So these are definitely for the people that like swing trades. These are made for you guys. And we even got the AlgoBot that has the percentage of win rates. As you can see, CCL, not as high as a percent rate as we like, but you know what? The AlgoBot is like the Terminator. It's not going to lie to you. It's not going to BS you. But definitely, these are the signals that came in. And so we're definitely paying attention to them moving forward in the week. But it's not just about me or these other guys or the AlgoBots, man. We got tons of stuff. 25 real-time analysts giving out alerts. Stocks, options, crypto, forex, long, short, day, swing, spreads, leaps, you name it, we got it, guys. I'm telling you something amazing. The bottom line is we are destroying the market, and we want you guys to come along with us on that journey. Now, with that said, we're going to go ahead and talk about some classes that we got going on, supply and demand zone. If you guys aren't trading supply and demand zone trading, you need to get spun up with us at Traders War Room, guys. We got you covered Sunday, 22 May, 1 p.m. Cost is $15. You guys keep the recording, man. Anybody that purchases it, even if you can't make it live, you are guaranteed to get the recording. You just register with your email and we got you covered, guys. Simple. We also offer a 5-day trial of premium gold membership over at Traders War Room. You can come get you some, try it out, and if you don't like it, guess what? You go back to being an awesome free member, man. We just want you on the team, but we love you as a premium member and we like you as a free member. So we want you over there regardless whether it's free or premium, but we got a lot of retaining that happens. So a lot of our free members, once they come to the premium side, they don't leave. We got an instant messaging platform, less noise, just alerts, guys. If you are tired of all the dings and the pings and all the other stuff that comes with the platforms, this is the one for you guys. It comes in like a text message. You just get nothing but alerts and some charts and some DD that follow the alerts, tell you why it's a good idea to get in. So it's something that you may be interested in, especially if you're feeling overwhelmed. So with that said, are you guys ready for war? I know I am. Real quick, go ahead and start putting the tickers you want to cover in the chat group. I want you guys to watch this short promo, get excited about the week that we just had and next week. And with that said, let's get it. Woo! Who's ready to make some money? Let's go kill it, guys. Let's hop into the charts and let's destroy this. I got a couple that I want to go over with you with. First, let's talk about SPY, guys. Man, here's SPY, okay? Now, we always want to go bird's eye view, right? Anytime we look at a chart, we want to look at a bird's eye view, okay? And here's the day chart, and we're pushing out. I want you guys to notice over here, this is pandemic level, okay? Notice 212.72, right? We got some levels that coincide with different pushes and volume and things of that nature on this chart. We got our melting point right up here, right? 478, and then we started melting down, guys, and it's been a sharp decline since then. We are approaching this line right here, which we have some strong support to the downside, guys. So what I want this to be an idea in your mind is I want you guys to understand that, listen, while we will have some relief days, like we had a little bit of relief day, closing out the market pretty strong, up 9 points, stuff like that, right? I want you guys to be prepared for the downside, okay? Because while we have the relief days, the downside is so strong right now with the bearish sentiment that we probably will start to continue down and down and down until we find the level where we'll start to consolidate a little bit. So I just want you guys to be prepared for that. Now, all the charts we're going to look at today, we're going to look at in the 4 minutes, or excuse me, the 4-hour chart, guys. Why do we like the 4-hour chart? Because it gives us a little bit more of a trend based off of price action, which is over here on the top chart, okay? So when we're looking and we're doing DD and we're doing technical stuff like that, it's always good to start either off the day chart or the 4-hour chart, in my opinion, okay? Because we want to get the best picture that we can find. And right now, of course, you can see that here was a shelf. We broke this, and we've been talking about breaking levels, shelves, and support and stuff like that. We had one here, we broke through, right? We had one here, we broke through. And when we're talking about breaking through, these are previous. We're breaking through to the downside here. Now we're at another shelf and we just broke through it again, guys. This was the shelf right here, somewhere around this area, and we broke to the downside and came back up, okay? So we got to be prepared for that. I would love to see SPY pop back up here because all of our favorite stocks are in the SPY, okay? You know, the Apple, the Microsoft, the Teslas, all of those good growth stocks that we love are trading in the SPY, but the likelihood of that coming back up to test this and failing is highly likely, especially in this market. Now, I want you guys to also pay attention to this other one, okay? This is the retail ETF, and you guys should be paying attention to this one. because especially right now, retail has been hit extremely hard. We saw this with, Cost, and what was that other one? Ross and Toast and no, Roast, and all these other ones that have been hit extremely hard. I want you guys to pay attention to this because as you see, we're still on a downward trend on this as well, okay? When we start to see these ETFs kind of spike up and see signs of reversal, that's when we can start to think and going, okay, it might be time to go ahead and get long, like real long, not just, a couple day swings or like a week swing or something like that, but actually start investing back into these particular favorite stocks for long holds. But until we start to see the trends to the upside, and this market closing today was not that trend, okay, we still need to consider the bearish side of the house. And unless you got a margin account, I know you're not shorting stocks. So if you want to play the bear side, you got to be quick on the ball and you got to play puts and you play calls. So you run your puts to the downside, you run your calls to the upside, and you make money while you're waiting for your stock to get to the price that you want to buy in at. Okay, that's what we do. And one last one, I want you guys to pay attention, put this on your radar. XAR. Now you guys might be asking what this is. This is a defense ETF, okay? Defense contracting. Now you're noticing the same kind of trend here, right? It's definitely beat up, going down. But I want you guys to pay attention, okay? As long as the war in Ukraine is going on, okay? This thing is going to start having money flow into it, all right? These guys in here, they're dealing with the airplane, the parts that make the airplanes, that sustain the airplanes, the helicopters, and also Lockheed Martin is in this, all right? Lockheed Martin is making those Javelin missiles. If you guys haven't heard, we just shipped off like 2,000 Javelin missiles over to Ukraine so they can blow Russian tanks and airplanes up and stuff like that. But those came out of our stockpile, so we have to replace those, all right? The big ones that you want to focus on in this particular one are Lockheed Martin, Northrop, and you want to, Raytheon Technologies, okay? You want to focus on those ones because those are the ones that are going to start moving. Boeing will come along with that too. A couple other ones will ride coattails, but those are the big ones. The longer the war goes and the more bloody it gets in the long term, you guys got to remember, we're only 3 months into this war in Ukraine and Russia right now, all right? The wars don't even really get nasty until it starts to get really desperate, and then it starts getting nasty. So if we continue on this, it's going to get nasty, and these defense contracting stocks are going to start rising because the money's going to start flowing into it. So pay attention to that. All right, we're going to go ahead and check the tickers out that you guys put in there. I see we already got some in there. Leroy, thank you for putting that. You want to talk about Best Buy. We had a fantastic trade with Best Buy, didn't we? Look at that. Okay, we even got some levels here. Guys, Best Buy on this downward trend, right? It's in this range. We charted this out. This is what made me chart my my pick for the $65 put pushing out to 3 June. All right. Now I see the downside. Yeah, we closed a little bit up today. That's fine. We got until 3 June. This is going to tank off of earnings, just like all of the other retail things are doing. Okay. Now I say this, okay, just to give you perspective. All right. Best Buy, fantastic, right? Right now, just think about it. Are people other than, super rich people, are people like you and I really thinking about going into Best Buy, spending $5,000 on an 85-inch OLED TV, right? When we can go to Walmart and get a Vizio 85-inch TV for like less than $1,000 bucks. All right. So let's be real. Okay. Normal people like you and I, we're not going out to spend $5,000 on a brand new super duper, 1 million pixel TV. We're going to go ahead and buy the Vizio that's good enough for right now and save ourselves $4,000. And that's the same thing that Best Buy is dealing with right now on the large scale. People just aren't buying the expensive electronics. They are just utilizing what they have. And Best Buy is going to suffer because of that supply and demand, and also because of the restrictions with the shipping and stuff like that. So they're going to go down. I got to believe that they're going to touch 65 and probably fail that and probably even bounce further. So we'll be good to go on this trade next week. It's the next ticker we want. We want Zoom. Zoom is beat up, guys. If you bet on Zoom, you're betting on the future, okay? Now, Zoom has a couple things that's really keeping it down. But I want you to look at this, okay? Let's look at this real fast. Let's look at this chart. Let's draw this horizontal line, okay? So we had a level here. There was a shelf, right? Okay, we got it. We had another shelf right here. Now, when we dipped down here, we're starting to get into a range consolidation box, guys, okay? We dipped down here. It didn't like being down here, all right? Which tells me that there's a lot of people that think this level here is too much, okay? And a lot of people are using Zoom. I use Zoom. We're using Zoom right now for this video conference, okay? Zoom is becoming very popular. However, they have a juggernaut in their way from being extremely effective, and that is called Microsoft and Microsoft Teams, all right? So we got to understand Microsoft Teams is the beast in this particular video conference era, okay? But Zoom definitely has a lot of power. They don't like this level down here. I got a feeling that we're probably going to consolidate within this range. We got about a $20 range here, 82 to 95. We're going to bounce around until eventually we're going to find our way. And if we do get that bullish sentiment coming into the market, we're going to come up here and we're going to break out, and then it's going to be a straight shot to probably peaking above $100. Okay, so we're definitely paying attention. I am long-term bullish on Zoom, and I think anywhere within this range consolidation is a good spot to dollar cost average into shares long with the Zoom. Now, got to be cautious though, because if we start to fail and the market continues to fail, Zoom is one of those that it's like, you know, if the market starts turning, I'll start going back into it and everything like that. If the market doesn't turn and it's just going to continue to the downside, Zoom will suffer as well, and will start to go down to the downside. So just be cautious going long in this particular ticker. I would like to see more volume to the upside, closer to this point here for a breakout before I start to think about calls and going long. But I do think dollar cost averaging for shares right now is definitely a good idea at the current price it is right now. You know, hold it for 5-10 years, thank me later. Woof. Petco. All right, guys. One thing about these pet companies, people love their pets, all right? Now, Petco is beat up, all right? We're looking at it as beat up. It did have some sideways movement, you know, had a little spike and stuff like that, and we saw some decent levels in here. Now, what we did is we spiked down, but we came back up pretty good. I got a feeling we're going to follow this pattern, kind of what we see. We see the spike down, it comes back up, spike down, comes back up, spike down, up. We're down, right? I think we start to come back up a little bit and testing these upper levels. Basically, from the spike down, it likes to come up and test about 50% of that drop. So that's what I'm anticipating, probably around here. You know, 1585, $16. It'll probably come up there and test that, and then we'll find out whether it can hold that level or not. But people love their pets, but what they're going to go for is they're not going to go for all the expensive stuff that costs the extra money with pets right now, all right? They're going to go with food, they're going to go with toys, and they're going to go with the essentials, okay? They're not going to worry about spending money on the grooming and stuff. They'll buy clippers from Walmart and do the grooming themselves. They're not going to pamper the pets right now because that costs extra money. And this is where Petco and the companies make a lot of their additional revenue with their additional, you know, luxury pet type of items. So we just got to keep that understanding. It's going to be bare essentials with the pet industry while inflation rates and things like that are going on, because people are just going to take care of their pets. They're going to love their pets, but they're not going to pay for the luxury items. All right, what's this? DG? What is this? Dollar General? Yeah, Dollar General. All right, Dollar General. You know, Dollar General was a pandemic hit, guys. They really came out strong in the pandemic, and they pretty much had stock shelves and everything, but they've been hit hard. Now, we do see that it is at a bottom, right? We see that right here, okay? It's at the bottom. I got a feeling we'll probably go and test this area. We haven't quite tested all the way down to the bottom yet with the 181. We haven't tested that. We're still about $7 away. I got a feeling we're probably going to go down and test that area, and I would assume that we'll probably bounce from the area. Dollar General is, you know, especially as money's going to start getting tight, as long as they keep their shelves stocked, Dollar General is going to be all right, and people are going to start flocking to them again rather than buying, you know, the more expensive items at the grocery stores and the malls and stuff like that. So Dollar General will be okay, but I do see some strong downward sentiment from it. I mean, this is right here. You got a trickle effect here, and then we got the dramatic drop, consolidate, dramatic drop. I think we come back down to test this bottom level, bounce from there, and then we'll see what we're made of. Do they have earnings coming up here soon? If they do, that might be a good thing to play going into earnings, but not through earnings. BABA. Oops, wrong one. BABA. All right, BABA, guys. I'm not really a big fan on the Chinese stocks, but you gotta admit, BABA is like the Amazon of China. Okay. The only issue that what's happening now is with China, you know, they're being real tight on restrictions and stuff like that. So this is going to suffer until those restrictions come out. But we do got some levels. And at this price, guys, for BABA, this is a steal. Down here would have been the area to have bought down here, but now we're kind of up. So we got some definite levels that we're looking at, okay? Kind of doing some sideways consolidating movement, trying to figure out what's going on, what direction we want to go. And if you notice, we had some tight price action here. We kind of spiked up a little bit, came down, but we ended up with the same area of the price action, okay? So one could assume we can write some triggers here, right? Go ahead and put a trigger out there, 81.25. And we'll go ahead and put a top trigger, right? 92.70. So we got some top triggers, okay? We close above 92.70 on a 5-minute chart. We start to think about going long on calls, okay? We close below 81.25 on the chart. We start to think about going long on some puts, at least 2-leg strategy, going up if we close above and going down if we close below, guys. So 2-leg strategy using at least a 5-minute chart, okay? 15-minute would be better, but at least a 5-minute chart closing for our trades to the upsides, triggering off of BABA right here. Dollar Tree. So we just did Dollar General. Now we're doing Dollar Tree. All right, Dollar Tree. Hey, it looks pretty much like Dollar General. Same thing with Dollar Tree. Actually, though, I like Dollar General a little bit better. Let me go back to Dollar General real quick. I like Dollar General a little bit better for the bounce because we already had the bottom here. I think it bounces from here to the upside. Dollar Tree, we haven't quite hit the bottom where it had the bottom yet. Okay, we're almost there, but this one was back a little bit further. Okay, so we got a little bit more downside coming on Dollar Tree, and I do think that we're gonna. Well, hang on, 124.76. What was that one? 123.84. Yeah, so we're looking like we got about a dollar movement to the downside. And actually, more than I'm looking at this, it's pretty much the same type of trade as Dollar General. Both of these will probably ride coattails and be sympathy plays. So if Dollar Tree reports some earnings or something and they start to tank, you can probably ride Dollar General down as well as a sympathy play, and vice versa. If they start running up to the upside, you can play them both ways. Kind of like John Deere and Cat did. Okay, did you guys notice that when Deere tanked today or yesterday off of earnings and whatever, and they tanked today, what did Cat do? Cat followed sympathy because they're in a very similar field, and it was the longevity of that industrial machinery type of sector. Okay, this would be the same type of trade with Dollar General and Dollar Tree as well. Sympathy trades on both of them. You can make money on both ways going the way you want to. Is that all the charts you guys want to talk about? I want to talk about a couple more charts while I guys got you here. Let's go ahead and look at some of these classic ones. GM. All right, I'm liking GM where we're at. Look at this, okay? Now, we've been on a decline. Obviously, we got their decline here, right? But we kind of got some sideways movement coming on, which tells me that we potentially could be looking at the bottom on GM, and we could be looking to the upside. All we need is some sort of catalyst with GM, okay? We just need a catalyst to spark this. And right now, people just aren't investing long in the market. They're trying to go into safe havens, places like John Deere. People were tucking money away. A lot of money was lost when John Deere tanked, guys. People were tucking money away there because they figured that was inflation-proof type of stock. And it definitely showed that it was not. Okay, I do like GM. I think we got some sideways movement here. Yes, it is to the downside, but we're not going steep as sharp to the downside here recently. So I do think this is a little slower moving and could give us an opportunity for some upside, especially if we start to get a bull trend and a reversal. Definitely, we could easily push back up to trying to test 37s, which would give us a $2 push, especially in some options, and that would be money in the bank every day. All right. Oh, we got another one here. Dix TD Bank. Dix. Oh, DKS. That's it. Sorry. DKS. All right, guys. I talked about DKS earlier today with a couple members on my server, and I think we got some downside on Dix. It's going to just basically be, it's a retail store, and I think that they're going to have the same type of problems that the other retail stores have had as far as, prices increasing, the cost of shipping goods and stuff like that. They're going to have some struggles with forward projections. So they may do fairly well on some earnings. Every time I go into Dick's, they're busy, and we got sports hitting up and stuff like that. Baseball season upon us, football season's about to start, and we just got done with basketball. So they do got some things going on. However, I think that doesn't take away from the fact that overall, as far as the big network of things in their bottom dollar is concerned, we're going to have some decline to dicks. And I do think that we dip a little bit lower. So I would be surprised if they shoot up from here, because we've been on a pretty steep decline. And I think we got one more leg to the downside. And I would assume probably it would not be out of the question to see $55 before we start to see enough's enough on this particular stock and people start to go long on it again. Could you recap SPY, Apple? Sorry if you already talked about it. Yeah, no problem, Kiana. As soon as I get done with TD, I'll go ahead and cover SPY and Apple again. No issues. All right, TD. What is that? Is that are you talking about Toronto Dominion? Leroy, you talking about Toronto Dominion? TD Bank? While we're waiting on Leroy to get back with us, let's go ahead and cover Apple. Okay, yeah, okay, yes, okay, we'll cover that in just a second. All right, guys, Apple. Man, a lot of analysts got Apple, got a bearish stance on it. What's his name? Michael Burry or Michael Berry or whatever, one of those popular, short seller guys that always takes bearish stances on things. He got a bearish stance on Apple. Listen, I just don't see it. I think Apple comes down a little bit, and then people are going to be like, you know what, enough's enough. And they got a couple things coming up. Here's one of the things I think of during inflations. Okay, so what are people going to really, buckle down and get, keep things going, right? Okay, they're going to buy some food, right? They're going to buy toilet paper so they can take dumps. They're going to buy hand soap so they can wash their hands, stuff like this. Okay, I got a feeling that people that have phones and Apple phones and stuff like this, they're going to continue to buy Apple products. Now, do I think they're going to buy outright an Apple 14 or an Apple 15? No. But here's how Apple makes money off of this, okay? They make deals with the wireless carriers. And now, since inflations are there, instead of a 2-year contract term, keeping our prices for the new upgrade phones and stuff like this, right? What they do is they do 3-year contract terms, keeping the price very similar and making it too good to be true for a brand new phone. So people that have those iPhone X's and stuff, now they're going to get the iPhone 14 and they're going to pay the $22 surcharge per month for 3 years instead of 2 years, and Apple still makes money. Okay, that's what I see happening. All right, Apple's still going to make money. All right, they're also looking at solving the chip crisis. That's money in the bank. They also got that new headset coming. That's going to be money in the bank. So Apple's going to be all right. They're just extremely low, which I'm looking at any level down here. This is buy zone. I already put the range where this was buying shares for me. Any time between 140 and 150, that's a share zone buy. I'm loving it down here because I'm an Apple shareholder long. I also play the option chains on it as well. I'd like to see one more close to the upside and come test this price action here, this tight closes here. I'd like to come back up and test this area before I go long on it. But down here, guys, 37, $30. This is money, guys. You need to be getting your guys' position for long in Apple all day, every day at this price, in my opinion. All right, where are we at? Bought more Apple leaps today. Yeah. Hey, McJohn, not a bad idea. I'm with you on that. I think that's a good investment. And we'll get Tesla. Yeah, we already did SPY. Let's do SPY. We're going to do that TD Bank real quick for Leroy. Then we're going to do SPY again. Now we'll catch the rest of the bottom of those lists. All right, so TD Bank. I like what I'm seeing, guy. Look at this. Okay, we got a nice little range here. We got our top level, boom, right there. We got our bottom level here. We got a nice range of about, what's that, a $5 range that we've been trading in. I like this. We're about 50% right here. We need to close to the upside before we start to think long, but I do like this. I've never looked at the stock before, but looking at it recently, it is holding up fairly well. I mean, it's not anything dramatic. You could definitely make some money on this. And looking at the sub indicators, we're about 50-50. So, as long as we can keep the volume on the buy side on this one, I think this is good to go. And looks like it has not that much volume though, as I'm looking at the volume, 47. So up, about a million, 2 million on the day. So it's okay volume. Got a little bit smaller volume than I prefer for trending stocks, but that could also pay in your advantage because any type of spike would definitely increase it to the upside. So that'd be good. You know, staying at the money, in the money. If we're looking at call options, what does the options chain look like? We got any volume? We're not looking at 20. Let's look at 17 June. We got any volume? So not much volume on the call side. What about the put side? So it looks like we got a little bit more bearish sentiment on this to the put side. So, you know, just use caution, you know, use risk management, but it definitely could be profitable, especially if we catch these guys that are bearish on it and we start riding up to the upside. They're going to definitely lose their money, and you can make that money off them. So that'd be a good one. All right, let's go ahead and cover Watson Lab, Tesla, and then we'll do the MSTR. Tesla, guys, man, woo, Tesla. So we had a little consolidation box, you know, that we had with Tesla, you know, definitely broke through the demand zone. Okay. It hasn't been at the supply zone for a minute. Okay. And Tesla's CEO doesn't do the stock any justice by staying in the limelight with the social media and the politics and stuff like that. So I got a feeling that a lot of people still believe Tesla to be overpriced. That's what a lot of analysts are thinking of Tesla. I know there's a lot of forward predictions on Tesla being $1,200, even $1,500 and stuff like that. But when you're looking at their balance sheet, a lot of these fundamentalist analysts still are looking at this like, you know, this is legitimately a $300 to $400 stock and should not be trading anywhere near, you know, 600, 700, 800 bucks. So I do think that we got some downside to Tesla. I am a Tesla fan, long on it, but I would rather play day trading right now on this one and look for a better entry into shares long, because I do think Tesla has some more downside to it, especially with the supply constraints and stuff like that. And especially if he's going to have to end up having to, you know, to sell some more shares back if it continues to go lower and stuff like that, to give more money back into the company. I read a report about something like that. That could definitely, you know, affect things as well. So I see some downside to it. I would be cautious on getting shares right now, because I think you can do better price if you wait it out a little bit. So that's my opinion. And MSTR. All right, and this is that one, you've asked this one before, haven't you? Because this is that one that's the crypto one, right? The MicroStrategy. I think you've asked this one before. Consolidate. Hey, look at that. Okay, we kind of had the V-shaped recovery. Actually, kind of looks like a cup and a long handle. It's a cup with a long handle. Yeah, I think it'd be okay. Again, I'm not too familiar with the stock, but we have some upside potential right here. Looks like we're holding consolidation pretty good. So we got some upside. We've tested this a couple times and failed. You know, came up here and tested this. Now, typically this M pattern that you see here, typically when you see this M pattern, come up, rejection, come down, come up, and you don't quite meet the, you know, the higher high or close to it like you did last time you come down, you'll have a fallout to the downside. And that could happen with this one. We could definitely see this come down towards the 153 area and could definitely bottom out, because it's gone up here, it's tested a couple times and failed, and it went up here wanting to test it, failed again, and now we're to the downside. But I do have some hope for this one. We could easily reverse off of this and come back up and test this for a third time. And, you know, hopefully third time's a charm. And then we go up to the next shelf level, looking at 270s, so on and so forth. So we'll end up seeing what happens with this one as time goes on. But just be cautious, because like I said, anytime I normally see this M pattern, it's usually the slide to the downside that happens. So, you know, we'll have to keep a watch on this one. SAFM has an earnings look profitable. Ooh, this chart's difficult. Look at this. This looks like you know, a choppy soup, man. This is chunky soup right here. I don't even know, you know, let's try to draw some lines on it. We're looking at here, it's the upside. Where's our price? 187.13. That's where we closed. Let's look at some downside. And we'll put it, so we got a little range here. Not bad, you know, a little $4 range that we're trading within, stuff like that. Looks like we're still 3/4 of the way to the upside. So, we got another test to the upside, hopefully break out. And if that happens, look at the last period where we had the top side. So there, if we can break above this, it would be reasonable to assume that we'll probably go back up to try to test this previous top level side right here. And look at that price. I just want you guys to use this as a reference point, okay? What is that, 92 to 88, right? 92 to 88, that's what, $4? 88 to 84, $4. Kind of trading in the same type of pattern, okay? So, if styles repeat themselves, it may actually come to the downside if it's following this particular consolidation pattern. Moving around, fail, come down, test, then you could see the downside would probably be a $4 downside to this price range right here about. Facebook and SPY, yeah, we'll look at it. Got you. All right, Facebook. Okay, I did this chart last night on a one-on-one mentoring, so I got some notes here. But basically, we drew some triggers on Facebook, and I'm a big fan of Facebook right here, especially at these levels, guys. I've been talking about buying shares in the Facebook back when it was here. Okay, it's just not a matter of if, it's a matter of when Facebook gets their feet underneath them and they start running back up to the upside. Okay, when we start to get the bulls coming in and going long on these particular stocks, the first one that they're going to probably grab up on in the social media realm is going to be Facebook. Okay, so they're just a juggernaut company. They got a lot of innovation coming, and they're the king in their sector. All right, these guys will win every day of the week over Snap, and I do like Snap for a value play, for the bang for your buck. But Facebook is the king. Okay, they're the ones that are going to win. And once we start getting the money flow back in, this thing's going to continue to surge up. It's just on a little bit of a a downward trend right now. But every analyst out there believes Facebook to be valued way higher than it is currently. It's just getting beat up. So I am a bull to the upside. I do think if we get the bullish sentiment from if we did quote unquote hit a bottom recently, right, then I think Facebook will reap the benefits of that, and we can start creeping up to our levels here. We got a level here, 199. We got little baby steps on our way up to ultimately 217 is my projected growth area, where I think if we break through 217, we start to skyrocket and clearing that gap that we had previously. And if you remember that gap, there's the gap. This is what we're talking about, where we melted up here and we shot down. So that's where we're going to start to clear. Once we clear above 217 and hold, we're going to start clearing this right here. And that's what I think. And I'm looking forward to that day, because that'll give me vindication on, I've been telling you guys for a minute. So yeah, so we'll see what happens. And what was that other one we talked about? SPY. You want to talk about SPY again? SPY. All right. So when we talked about SPY, I wanted you to look at the day chart first. We covered it earlier. I want you guys to look, see SPY. All right. Notice here's pandemic level, right? Boom. Okay. No. Oh, actually, we're further out. Sorry. There's pandemic level right here. No, further out. There we are. There it is. Okay. There's the pandemic depth right there. Boom. We still got a lot of ways to go between here and there, so don't worry. But we do have levels that are strong areas to the downside. One of them's here. So we got some 353. We could easily, especially with this downward sentiment that we have, easily see 353 here in the near term. And I just want you guys to understand that we're going to have relief days. You're going to see SPY push up. You're going to see it push down, push up, push down. But ultimately, if we keep the bearish sentiment going, one day, eventually, here in the near future, we're going to go down here. We're going to test 355.53. And that's going to be an area where we're going to go down and at least check on and see if we can hold it. So just have that ready in your mindset. But look at this sharp decline. Still trading consistently underneath the 9 EMA consistently until we start to trade on the upside like this of the 9 EMA. We're looking at the bearish sentiment continuing to the downside with relief days. I mean, look at here. Okay, you had a relief 380 to 396. That's a, look at that. That's a $16 movement in the day on SPY. So there's opportunity for sure to make money in SPY, but ultimately to the downside we go unless we start closing with the momentum above this 90 EMA to the upside. All right, guys. Hey, appreciate it. Guys, I want you all to have a fantastic Friday, okay? We made some killer money this week. You guys showed me some love while I was sick with COVID. I'm feeling a lot better. We'll try to eat some pizza tonight and see how my stomach feels with that. But I want you guys to know that, you know, from me to you all, I really appreciate you guys giving all the warm wishes and stuff while I was ill and sick. And thank you for rocking with us at Traders War Room. Check us out on the website, traderswarroom.com. Check us out on the YouTube, social media, and don't forget to sign up for the supply and demand class so you guys can learn how to trade the supply and demand stock market that we're in currently, guys, and make some killer money. Talk to you guys later. Have a great weekend. Peace.